I think this is certainly as good a time as any for Bitcoin to break out and for people in crypto to move there for safety. I think there's two things that I'm curious about.
In this interview, Guy from the Coinbureau shares his insights and predictions for the future of Bitcoin and the crypto market in 2023. According to him, despite some positive momentum, the current sentiment surrounding Bitcoin suggests a potential market crash later this year. His analysis indicates that Bitcoin may experience significant downward movement, possibly reaching a bottom price of $10,000. To support his predictions, he draws a correlation between Bitcoin and the stock market, which he believes will also decline in 2023. Given these observations, Guy emphasizes the importance of having a long-term strategy, especially for those who consider Bitcoin as the gold standard in the crypto market. He closely examines recent market trends and highlights that the next few months will be crucial for Bitcoin. Investors should be aware that these market conditions carry a high level of risk. Without further ado, let's delve into the interview as the expert discusses the latest Bitcoin update and provides insights into what we can expect in the crypto market in 2023.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
I'm kind of bearish, really, the last few months. So, I mean, I'm not going to pretend that that I saw everything that's happened over the last few days coming. I mean, it doesn't surprise me, but I certainly had no inkling it would come so quickly. But anyway, we'll talk about that in a minute. But yeah, I mean, in terms of the next few weeks and months, I just can't really see it doing anything other than kind of chopping sideways. I don't think there's going to be, well, first of all, I just don't see many people buying, and I don't see many people selling either. I mean, we've seen plenty of charts, I think, over the last couple of weeks. Exchange balances are low, probably lower now, given everything that's happened in the past few days. And then there's all this talk of liquidity being sucked out of the system by the Treasury as it refills the TGA. So I can't really see a scenario where lots of people are buying, but I don't really see an awful lot of selling either. I think the market is just kind of, people are just content to kind of sit there and wait out this storm. Now, it depends how long this particular storm is going to last. I think it could be quite a while yet. So when you combine that, a general sort of lack of liquidity with fairly low sentiment, and I guess you call it a kind of hodler's mentality, what does that translate into for me? I think, yeah, just pretty much sideways price action for the next few months at least. I stuck to my strategy of doing as little as possible, absolutely nothing, which, we've got a Fed meeting next week. I think the Bank of Canada and perhaps the Bank of Australia have both hiked again. The last time I looked at the CME forecasts, it was 66 to 33% thinking that we might possibly see a rate hike. So although I don't think I don't personally think the Fed will hike again next week, but I don't think we can rule it out either. There's two things that I'm curious about. One is kind of Bitcoin dominance excluding stablecoins, because I think the overall stablecoin market cap has been pretty strong and until lately. And obviously, I think that's a big thing to consider. All the liquidity, all the money sloshing around in the likes of USDT and USDC. And of course, that's still a big worry on the horizon, because the SEC's gone after Binance, it's gone after Coinbase. What next? Is it going to go after stablecoins? I think so. That's something we still need to be wary of. So I think it would be interesting. I don't know if you've got that. I don't know if you've got that chart to hand, Ben. Bitcoin dominance excluding stablecoins. I think the other thing to consider is, if you like, the kind of big black swan on the horizon at the moment, or possibly, is ETH hasn't been mentioned in either the Binance or the Coinbase suit, and much to everyone's relief. But there's still that question mark, isn't there? There's still that uncertainty about whether or not the SEC is kind of cooking something when it comes to Ethereum. No, I'd like to think that is a route that they are not going to go down. But then again, after the last couple of days, when they've chosen to go after two of the biggest players in the industry, that says to me that they're obviously kind of up for a fight. So you can't rule that out. And if that does happen, then that really is when you'll see Bitcoin dominance go absolutely crazy. But I think ETH, especially now that you can unstake it, especially now that institutions should, in theory, feel more comfortable about holding it and staking it, I think that is still an attractive asset for many. And I think that's always going to suck up some of the excess liquidity floating around. And of course, I think I saw somewhere that a lot of these alts that have been bleeding lately have been in the wake of the Binance and Coinbase suits, seem to have been bleeding mostly into ETH, I think. So I think that's something to consider. I think Ethereum is getting this reputation sort of not quite as entrenched as Bitcoin, because obviously, it hasn't been fully confirmed as a commodity like Bitcoin has. But I think after Bitcoin, Ethereum is the next and probably only really safe haven in crypto. But again, as I say, that's the case right now. And I think the big danger is that the SEC decides to go after it. So there are these dark clouds sort of swirling. But at the moment, Ethereum, it's held up really well, and it's kind of proving its worth. And whatever you say about the meme coin craze and stuff, it all happened there, and it was good for Ethereum, like it or not. I think that the crypto industry has faced way worse than this. And something I always like to think about at times like this, at times when there's regulatory worries or something going wrong with, all that catastrophe we saw last year with FTX and everything else, all these centralized entities going down, the phrase that always springs to mind for me is blocks are still being added to the blockchain. And that for me is really important. The likes of Bitcoin, Ethereum, all these other projects, they're ticking along. They're still doing what's expected of them. And for me, that always brings me hope, because it's everything else that's being kind of ironed out, and it will get ironed out. And this is a sort of phase of pain that we need to go through in order to end up with a cleaner and more regulated industry. And that's, you just got to put up with it. So although it's painful, I think, in the long term, it's a necessary pain. It's something that we have to go through.
When it comes to economic analysis, Guy believes that the performance of the U.S. economy has a significant impact on global markets, particularly the cryptocurrency market. He points out that the crashes we have witnessed were necessary to prevent an even larger crash in the future. Guy expresses concerns that the economy may take a considerable amount of time to recover if there are underlying issues. However, he highlights that the U.S. economy remains the strongest and holds a significant share of the market's wealth. With Bitcoin and other crypto markets closely tied to the actions of central banks, regulations, and global economic conditions, Guy emphasizes the importance of closely monitoring these factors in the coming months. The future of Bitcoin in the crypto market is influenced by these dynamics, making it a crucial aspect to observe. Share your thoughts on the latest interview with Guy from Coinbureau and his predictions for Bitcoin in the crypto market this year by commenting down below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.